Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, hope everybody is doing well. Today we're going to be reviewing the Tropical Battery Secondary Public Offer. This is May 12th, 2025. So depending on when you're watching this, I believe the offer opens May 22nd, 2025. So we're going to go through the prospectus as best as we can. Now, we've done these reviews before. If you're not familiar with how to read a prospectus, if you're not sure what a secondary offer is, or an APO or an IPO, all of those things we cover in our monthly investment challenge. So if you want to learn how to invest, learn how to, do research, understand the markets, etc., that's our monthly investment challenge. Link is in the description of this video. So that's where you can learn and get really in-depth as to how you can form your investment strategy, understand the market, all of that good stuff. So I'm going to go through the prospectus. We're going to talk about the offer, why the need to do the offer, go into the details of it. Then we're going to look at the stock price, and I'll keep it very, very high level for the purposes of this video. We are going to do an in-depth review inside our community this weekend. So you still have a chance to join our challenge community to be a part of that review. So just, look out for that information. All right. So let me bring that up here. So this was released earlier today. So a lot that can be taken from it. I'm going through some of this live, but some of it I would have already just done a quick scan through to understand what the offer was about. One of the things I was waiting for, I said this in previous videos, I was waiting to see how many shares are being offered, the price of the offer, and the use of proceeds, right? Full use of proceeds, because we had some general idea as to why they were raising the money. And so we'll talk about that when we get there. And Tropical is a company that we've interviewed the CEO multiple times here on our platform. I do recommend that if it's your first time hearing about them, that you watch those videos to get a good understanding of the company, what they're doing, which industries, etc. We'll touch on that very briefly here, but this is not meant to be an overview. This is mainly focused on the prospectus, right? So we'll go through here. So the first screen here is showing issue of 554,545,445 ordinary shares. So these are new shares, and the ability to upsize to 1.1 billion shares. Now the upsize simply means that if they see demand past the 554, then they're able to upsize. We've seen this before with other types of offers. So an upsize option is there. So it really depends on how much they're able to raise. The total raise, I believe, is 1.7 billion. If I'm not mistaken, we can, do the math to confirm. And we'll talk about the use of proceeds very soon. But the price here they're looking to go with is $1.87 per share. And so the date of this prospectus was a week ago. We're reviewing it today. And so it says up to 267 million ordinary shares are initially reserved for priority application by the reserved share applicants falling within key strategic investor pool at the same price. And then applications must be a minimum of 1,000 ordinary shares, and then multiples of 100, right? So standard stuff here. We're not seeing anything new there. And again, we've done these so many times. I'm feeling like I don't need to go in depth into these things here, right? So let's get to some key areas of this. So we'll start with key dates. So the open date is May 22nd, and I believe companies normally have an investor briefing at some point, so they're likely to have one as well. The The date for that will likely be shared publicly at some point. The closing date is going to be June 6th. So it seems that they're giving themselves maybe about 2 weeks, a little bit over 2 weeks for the offer. But the fact that it's opening today, I think it's already available for subscription. I'll confirm that. But usually once a prospectus comes out within 24 hours, it's available for purchase. And of course, expected dispatch of statements and refunds 10 days after closing date, whenever that is. And that's it for key dates. All right, next, let's look at some key information here. So Tropical Battery is the company, of course. Cygnus Capital is the arranger. And of course, this stands out because, of course, when they got the financing, we knew Cygnus was a part of that. The brokers, Sagicor Investments, NCB Capital Markets are brokers here. I figure at some point we'll hear about whether other brokers are going to be involved, but Sagicor and NCB Capital Markets are brokers on this so far. And of course, use of proceeds, we're very, very interested in this part. And it says here to repay the existing loan of approximately US 9.5 million or 1.4 billion owed to CIBC First Caribbean. Now, I think how it worked is that they borrowed initially from Cygnus to close the transaction for Rose Batteries, and then they refinanced with CIBC. And so they want to raise this capital to be able to repay CIBC. And they also want to repay monies owed on outstanding bonds of approximately 300 million. So they're trying to raise 1.7 billion to repay debt. Of course, there are costs related to the transaction. Broker has to get paid, the JC has to get paid, and then of course the rest to be applied towards general working capital for growth opportunities. This is just, when I saw this, I was like, okay, that's about as big as you can get. That they didn't even need to add this part, honestly, right? This part is kind of standard. In the event that the company is only able to raise the minimum amount, the company will use the proceeds towards a CIBC loan. So what they're saying here is that if they only raise $1 billion, then they'll prioritize how they disperse those funds. If they raise the full amount, then they'll plan to do everything from there. So the below timetable is indicative of how it will be implemented on a best effort basis, with the directors of the company, however, serving the right to change the dates, that the invitation remains open based on market conditions and other relevant factors. We've seen sometimes closing dates are extended depending on, things that need to be tidied up. We've also seen offers in the past that weren't able to raise the required capital. I remember 138 Student Living comes to mind. I think NCB APO, they weren't able to raise all the funds they're looking for as well. I mean, so we'll see. Now the amount that they're looking for is, I mean, it's not really considered a large amount, just under 2 billion, but it depends, right? Timing is everything, how the market responds, the potential opportunity that they see, the amount of marketing that they do, the interviews, roadshows, etc., and how aggressive they are. Because at this point, marketing and probably direct better discussions with special investors, etc., all those things add to helping the offer close successfully. So I mean, we'll see how successful they are at these things, because they'll have to be doing that for the next few weeks. All of these stuff are standard. So basis of allotment within 6 business days after the closing date. So whenever that closing date is, we'll see the basis of allotment, and the basis of allotment tells you how many shares or how the shares will be allocated. And then of course, 21 days after the closing date, the shares will be available to those who would have purchased, and so on and so forth, right? I can skip from there. Now, I did want to go through this letter. I thought this was key to go through. I'm going to try and go through this as quickly as I can. So it says here, message from the CEO. So dear prospective investors, we humbly appreciate you taking the time to review. As we continue to advance, we're pleased to share with you some exciting developments. So since their IPO, so they've been listed just 5 years, right? Not even full 5 years as yet. So they've been on an upward trajectory. We definitely can concur that. So consistent revenue and dividend growth. So this is one company, of course, that would have stood out to me because they didn't pay a dividend last year because of the acquisition, but they've been consistently doubling their dividend, right? So that's one of the things I'm looking out for, to see if they have the ability after the finance costs go down to again double that dividend. Of course, we now have the amount of shares that they're going to issue. We can look at what the earnings have been, do some calculations as to what dividend yield looks feasible for them, right? Since their IPO listing, we've said that part already. They've acquired a 51% stake in a renewable energy solution provider. That's Kaya Energy Group in DR. That was in 2023. And they've also done a 100% acquisition of Rose Batteries. That was last year. And we've seen a significant growth in revenues from the acquisition. So they've done 22 million US in revenue and 3.7 million US in net income for the calendar year 2023. So they're showing you what Rose did in 2023 right before the acquisition would have been completed. So combined with insights from Rose Batteries has solidified their belief that the acquisition presents a promising investment opportunity. They financed the acquisition through bridge financing to capitalize on the time-sensitive opportunity. So essentially saying they didn't have enough time to go through maybe an offer or something else. They had to close the deal quickly. So they did something, they did bridge financing first and then they refinanced after that, right? So the capital raise will retire the debt related to the bridge financing, freeing up cash that would have otherwise been allocated to the debt service. And when you look at their P&L, you see that it is likely to boost net profits. It certainly will if they're able to raise the capital, enabling them to distribute higher dividends and reinvest in the business for further growth, right? So it says further, based on the quality of earnings report from KPMG San Francisco, the acquisition multiple on Rose Batteries trailing 12 months earnings was 6.5. Tropical Battery trades at a price to earnings ratio from 12 to 23. Therefore, buying earnings at a lower multiple than the company's trading is more likely to provide added value to shareholders. So they're pretty much saying they got a deal with Rose Batteries based on the PE, right, and how it was trading at the time. And these are the numbers for the financial year ending 2024. So I won't speak to that because we'll just look at the Q1 and what it says. I'll go to the impact of one-time costs. So despite their strong operating performance, high interest costs and one-off acquisition related expenses resulted in a decline in net profit at 76.3 reduction. However, if those costs were excluded, then the profit before tax would have stood at 200 million, right? So if they didn't have the finance costs, which is why they're doing the offer, then they would have been able to realize 200 million in profits, right? So they're saying that they need the capital to be able to realize this, right? So in terms of their USA business, 40% of their sales is from Rose Electronics, located in San Jose. Now my question is, right, and this is one of the things, if I'm able to interview the CEO, that I would ask him is what does a growth plan look like specifically for Rose Batteries, right? Because it is an interesting acquisition. I've actually followed the Rose Batteries team on LinkedIn and, seeing just some of the things they've posted, some of the things that they've done. It does appear to be an interesting company. And I would love to see what opportunities they have to grow, specifically that business, because I do see where that would be just some of the applications that Alexander mentioned in terms of Rose Batteries, what they're doing, who they're doing it for. I'm just looking to see how quickly they can scale that business. And I mean, so far we've seen the impact in terms of revenues for them, but I'd love to hear the roadmap specifically for Rose Batteries. Right. So this is speaking about, some of that. So their scope of services, of course, you can go through that. And here's some background on Rose. I won't go into that right now based on time, but that's something that I'd certainly recommend you read. So I'll go straight to the outlook here, right? So by issuing 900 million additional shares, priced at 187, they project to raise over 1.7 billion. So if they are successful, it will require them to take steps to transition to the main market, and they would have indicated their intention to do that last year, and we remember that. And that's based on how much they would be raising. They would have to make that transition because there's a limit for junior market companies. So if they do move to the main market, then we also have to consider the tax implications of that based on profitability, etc. So that's one of the things to look at. So they believe that the acquisition is not just a transaction, but a strategic move, promising immense value and returns. Their payment and financing strategy is meticulously crafted to ensure maximum benefits for all parties, emphasizing the growth and prosperity of Tropical Battery and its shareholders. And then, of course, they're inviting persons and spoke about how to apply. So I'm going to go through. I'm looking for now their dividend policy. Now, let me address the issue of the price, right? Because that's usually an area of concern for persons. So it's saying here the price with respect to ordinary shares is as follows, right? It's 187. The price was based on a 10% discount to the simple average of the closing price for the last 10 trading days prior to the date of the prospectus, right? So what they would have done, and the date on the prospectus, I believe, is May 5th. So they would have looked at the 10 trading days prior, do that average and do a 10% discount. And that's how they came up with the 187. So some persons may say, for example, I think the price that it closed at today might have been, let me see. So the price closed at 186 is what I'm seeing on the JSE, and the price here is 187. So persons may be like, why is the offer price higher? Things like that. It's really based on when the price was calculated, based on when the prospectus is being put together, and that's something you have to appreciate. It's not like the price can be set on the day off, because there's the prospectus is a legal document, right? So that has to be static, submitted for approval, and then issued to the public. And from what I've seen from the different companies we've worked with, the CEOs we've spoken to, that approval process can take anywhere from a month to maybe 6 months, right? I've heard some CEOs waiting. I remember when Fosterich was doing their rights issue, it took a very long time to actually get that, approved, because that was right after like the SSL stuff, and there's some other things that were happening. So that took a while to approve. Point being that this price is not going to factor in the date on when it was released. And so there are some things to consider there as well. And the truth is, if you're interested in the company, you can decide if you want to buy on the market or buy through the offer, right? The disadvantage to the company is that if the market price is lower and persons buy shares in that way, it doesn't benefit them in raising additional capital. And then the benefit to you as a potential investor in buying through the offer is that there's a fixed fee. I think standard fee is $172. So it's not a percentage. So you have to really weigh that and see which works for you if you choose to participate in the offer, right? So I mentioned before they have 267 million shares reserved for key investors. And as looking for, I know Alexander is big on like employees, investing as well. So I don't see anything about an employee pool. Maybe I'll ask him about that as well, because I know that's something that we've spoken about before, them wanting to ensure that all of their employees are investing. So I'll ask about that when I get the chance. I'm looking to see what else we can touch on here. I'm looking for dividend policy now, really. Let's see, I think we can go through this. So this part is going to be important. The number of issued shares should the offer be fully subscribed. So they have 1.3 billion shares outstanding now. That will change to 2.3 billion if fully subscribed. So this amount is important for a couple of reasons, right? And this is what I personally was waiting for, to see how I feel about the offer. I'll share my thoughts in terms of how I feel in the community. Right now, I'm just sharing the information with you for you to decide. But this, of course, impacts things like their earnings per share. It impacts their dividends. It impacts their reported profitability. The move to the main market impacts that as well, because there'll be a standard rate for income tax once they get to the main market and things of that nature. So all those things you have to think about when considering this offer, right? We spoke about the use of proceeds already, and what I'm looking for is the dividend policy. If I can't find it, then I'll search. But I'm thinking, and of course, you want to go through the risks, of course, for any company, and there's some special things that may be, specific for them. I did like this section as well, where spoke about their subsidiaries. So this gives you a good feel for the business. So you have tropical renewable energy, tropical mobility, which I think they do EVs and things like that. You have tropical finance, right? This is the affiliate aimed at expanding access to renewable energy and electric mobility solutions. So that one, I don't think I saw it before, so that was good to see. And then their acquisitions and global expansions are here. So you have Kaya that we spoke about, Rose Batteries, which they acquired last year, and you see where Rose ships to. So all these countries, good to see as well. And then just spoke about their footprint, right? They also broke down the top 10 shareholders, what that will look like pre and post offer. So this is the top 10 now, and then this is what it will look like after issues, if the offer is fully subscribed. So I'll just focus on the public shares. So 230 million resides outside the top 10 now. After this offer, it will be almost 1 billion shares outside the top 10, right? So something to bear in mind. Then, of course, they have their trademarks there, properties, material contracts, leases. All of these things are good to go through. This is what I was waiting for, right? Dividend policy. So if in any accounting period the company has profits available for distribution, the company, so far as legally able and willing, and each of the shareholders shall procure that those profits are applied in the following order of priority. 1, providing working capital to finance continuing operations and internal growth of the company. Transfers to reserves consistent with normal commercial requirements. And then, of course, payment of cash dividends for up to 50% of the balance of such profits available for distribution. All right, so with this information, now you can, of course, do some calculations. I recommend you do that. We'll be doing it, of course, in our challenge community, breaking that stuff down and then talking about it from there. But these would be the dividends that they would have declared since listing. So 2021, 2022, 2023, and they've gone 1 cent, 2 cent, 4 cents. So what they have been doing is doubling their dividend, as we mentioned before. And then these are their insurance arrangements. I think that's it, right? So I would probably look at the Q1 report now. That's the thing that I'll look at before I wrap up this part and take any questions. I am seeing those questions, guys. I'll get to it in a second. So looking at Q1, again, we're just seeing the impact of Rose Batteries on their numbers. So revenues went from 0.8 billion in Q1 to 1.6, right? So they doubled their Q1 revenues year over year. And that's, I think, a large part due to the acquisition. So I'll just go to the P&L because that's the part I'm most interested in for the purposes of this. Do I want to read the outlook as well? I think this is where they're talking about. Okay, yeah. All right, let me go straight to here. Yeah, so this is the part I wanted to focus on specifically, right? The finance cost. So this is their Q1. Is this the Q1 I'm looking for? This is their Q1 2025. Am I seeing correctly? 3 months ended December 24. Okay, I just wanted to be sure I'm in the right place here. So the main issue that they have is finance costs, right? So before we even look at anything else, this is what they're trying to bring down as it relates to their raise. So this number would not be there if they were able to clear that debt. And so of course, if this is not there, so two things: if they remained on the junior market and that's not there, they'd be able to benefit from no income tax. So this taxation there would be zero, but of course, since you're going to move to the main market, you have to factor that in as well. So the removal of the finance costs, the inclusion of taxes is how you can kind of calculate what the new net profit is likely to be. And the EPS, of course, you can calculate that based on the number of shares that you're expecting to be there, right? So those are the things that I would say you need to look at considering this offer. Now, I would say a couple of things here for them before I take your questions and kind of, wrap up this video. I wanted to keep it under 30 minutes, so I'm almost there. So the business itself, I think we've done enough reviews on them, earnings calls, etc. with the company. They've clearly shown growth. Now, one of the things you guys will know about me is that I love to see when junior market companies focus on growth. I do not like to see, there was a company that came out that listed last year, report came out, revenues were down 60 or 70%. That's not what you want to see for a junior market company, right? I won't call the name of the company, but that hasn't been the case with Tropical, right? They've shown aggressive growth. They've done acquisitions and things that have been able to allow them to grow inorganically, which has been good. Dividends have been there and steady. I didn't think they needed to start paying a dividend right away. That's one of the things I've also said about junior market company. But the fact that they've been able to just kind of start off small and build up is still good while still being able to grow. Because usually when companies use cash to pay dividends and they're strapped for cash to grow strategically, that has not been the case for them. And so they've been able to do both, which is, I think, good to see. The finance costs being brought down is very key and strategic for them. So everything will be hinged on whether or not they're able to successfully raise. So if they are able to do that, then the bottom line is going to look very good for them. Then the transition to the main market will be in short order. So all things going well for them, this will be good for the business, for the bottom line, for shareholders in terms of dividends. The rest is really just to see whether or not the market is in a state right now where it can provide that capital. So they do have 267 million that's reserved. That's about 25% of the initial amount that they're trying to raise. That's good. I would have liked to see that number be bigger though, maybe like half of it, especially since you're looking to maybe upsize. I'd love to see that reserved pool being at least half of that though. I do think that, well, we'll see, right? We'll see how they do there. It is a certain amount, it is a fair amount of capital, so I don't think this is gonna be one of those, close on the opening day type of offer. It will be interesting to see how the stock trades, knowing, how the market feels about offers of this nature. So the trading over the next week or two will be interesting to see, like whether volume, whether price, those kind of things. And oh yeah, absolutely, Phil. Right. So Phil saying, remember that junior market doesn't mean junior company. Being newly listed doesn't mean you can't or shouldn't pay dividends. You're correct. I think this for me this is specifically that point I made for startups. So that's absolutely fair, because there are certain junior market companies that aren't new companies at all, or young companies, right? So for sure, you're right there. Absolutely, generally speaking, of course. So this is a question, Tavares, right? Will their profits offset the number of shares you're adding? This is an important question, and this is what I need to do the math for that I haven't done yet. Because if we do the math and their EPS is still able to continually grow, my thing is that I don't want to see a company's EPS dip unless there's a clear path. No, because they've already done the acquisition, we already can do an approximation as to what the EPS will look like. So to me, it's straightforward. If the EPS can continue to grow based on what you're on the path to earning, it makes sense. If the EPS is going to reduce even in the short term, then they would need to show clearly what that growth will look like, right? So those are things I'm interested in doing some calculation on, because I was thinking, as I said, to see how many shares will be issued. Now, I know it's a matter of if you're able to use at a higher price, you'll be less shares, etc. But of course, those are things that you have to factor in terms of market dynamics. And so those are the things to think about here for them. Now they do, so for example, if you're not able to raise the full amount and they're able to take down some of the debt, etc., then that may still see some growth, but then of course more shares being issued, that also has to now be considered in terms of that EPS growth, right? So Tavares saying you're currently seeing negative PE. Well, I haven't done my personal calculations yet, so I'll need to do that. And I'll say, so I need to drop the data in, look at the new shares, look at what estimated earnings will be and all of that stuff. But before this, Tropical was one of those companies, as I mentioned, that they've shown great growth, I think, for just 4 years, 5 years being listed. The CEO has gone out of his way to communicate with shareholders. I'm certainly a fan of that. And, you really see from the interviews that we've done, or from the interviews, otherwise, that, there are great aspirations for the company. So we certainly, wish them all the best where that is concerned. So let me take your questions and then I can try to wrap up. Cliff, what you doing to me? Cliff says, are you planning to sell your son's Tropical shares, or are you planning to buy more in the APO? So I'm certainly not gonna sell, right? In this case, for my son, his timeline is, he's 4. I don't think I need to be in a rush to sell for him, but so certainly we have to look to see what cash we have available. Likely will average down, because I don't remember our average price, but I remember it passing $3 a few weeks or months ago. So being down, I think 30-40% makes sense to average down. I don't remember what the average price is though. Maybe the price was maybe a little bit over $2. So I'll look at that first. But I do like the company, just based on I have a feeling that, this was not said to me explicitly, but I have a feeling that they're certainly going to have more inorganic growth opportunities once they're able to get past this fundraise here. And so being able to be a company, I believe one of the things Alexander said, in a couple of years they plan to be a company. I don't remember the number that he mentioned. I have a figure in my mind, but I don't want to misquote him. But you just get the impression that the company will continue to grow. And so that's good, I think, for a junior market company, for my son who has a 20-year timeline, right? Not that I'm treating his portfolio like I'm just setting it and forget it, because I did have to rebalance for him, because he's had his portfolio for 3 years now, because we fostered him when he was 1. He's now 4, so he's had his portfolio for at least 2.5 years. Our second son does not have a portfolio yet, though, so we're gonna have to start one for him. And I don't know what's gonna be in that yet. So hopefully that helps you, Cliff. But depending on the price, it may make sense to average down. I am interested to see how it will trade, though. So if there are buying opportunities, certainly going to take them, especially if it gets to a particular price range. I think that just makes sense for us. Why NCB Capital Markets never buy up the queue before the prospectus drop like they did for Trans Jamaica off of a sale? Ryan, is that speculation or a fact? I mean, I don't know. I can't answer that. That's a question for NCB. I don't see any other questions. Yeah, so I believe that I'm sure we'll hear from them. I know I've been talking to Alexander about their plans, etc. when we did the earnings calls and so on with them. In the past, I'm sure they're going to be having some investor briefing or something like that. That's pretty much as standard now. And so you'll get the opportunity, if you're interested, to hear more from the company. I think that certainly, to me, this is a math problem, right? So do the math, look at the shares, look at the current profitability of the company, and then decide if this offer moves the needle for you in terms of the company. And of course, listen to what they're saying in terms of their strategic plans. Now, if it's not in the prospectus, you're not likely to get much more context. That's what I've noticed as well. Usually companies are directed to only speak on what is in the prospectus. So I think, though, that I've seen a company that is pretty straightforward, meaning you kind of saw the signs leading up to the acquisition. They announced they registered a company in the US. Then, within a year, you heard about the acquisition. So they've always, I think, done a good job of keeping investors informed, again, better than most. So, I mean, I think, outside of them being able to raise the capital, not much in terms of negatives about the company in that regard. Whether or not they raise the capital is completely based on the climate and whether or not investors are willing to part with their capital at this time based on what they believe the opportunity is. But I do want to see in general now more offers, right? Because we're at May, about to be June, and I was expecting more offers this year, right? We're almost halfway point for the year. There are some specific offers that I can't mention the name for because they're not public yet. But hopefully we see at least a couple more of these come out, so that we can get more interest in terms of just activity for the market, right? Because I love when new offers come, they bring in new investors. When new investors come in, there's market activity. With market activity, there's volatility. With volatility, there's growth, an opportunity to take profit. When there's opportunities to take profits, that's how investors make money, right? So I'd love to see, I wouldn't say that. No, I don't. I don't agree with that statement here. For me, when you're investing with a long timeline, you don't know the future. You make the best decision based on information you have now, which I have. and Tropical has been a part of his portfolio, I'd say probably for a year or more, right? So certainly in the last year, as we saw for the revenues have doubled for Q1, right? So at the point we made the investment decision, it was a good investment decision. Now, if at any point in the future that stops being true, we adjust. But certainly, when you're investing for someone with a long time horizon, you literally just have to wait and see, because for every stock in my portfolio, I have to wait and see, right? Have a thesis based on them, and each quarter that comes, it's a test to see whether or not I was right or wrong. That's at least how I look at it. So if it is that a future point comes, my thesis is wrong, I change direction. If my thesis is right, I continue to hold. So for my son's case, he can withstand volatility a lot more than I can for my personal portfolio. Again, time horizon is far out. And one of the things I'll say to that investors that you may not be considering, no, I don't know, I'm just assuming here, we look at companies 5 years in the future and say, if you dollar cost average into this company over the last 5 years, you'd have been up X, or you'd have gotten X dividends, etc. You can't, hindsight is always 2020. But when you're on the opposite side, looking ahead, you can only make decisions based on the information that you have. Now, in his case, we don't invest monthly. We invest more quarterly or every 6 months, depending on availability of cash. We look to see what's in his portfolio. We look to see how we can build it up to a certain type of structure. And the plan is to, as soon as he's able to have some input, whether it be he's a teenager, he can say, what he likes, what he doesn't like. At the very least, we're trying to build up something that we think will be good for him to have 10 years from now, 15 years from now. And so nobody knows what that will be at that point. So I wouldn't say that's hope. If at any point the companies in his portfolio don't seem to be good decisions, that will change. I think that's reasonable for anybody. That's a personal decision, and that's okay. Your decision for your children will be different than that of mine. I think. So no problem there. Averaging down is a plan right now, still a company to hold. I'm literally waiting to do the math first here. As I said, so I'll see. I don't make decisions without, going through the things that are a factor for me. Again, this is what I was waiting for, to see, how many shares, at what price, what the growth will likely look like based on what they've estimated. And so it's just that. So I make decisions based on a calculated approach. I'm never in a rush, because the market gives multiple opportunities, right? And if it is that there's an opportunity there, I'll take it. If not, then we move from there, right? So absolutely do what you think is best. If it's been in his portfolio for a year, that means it would certainly be at a loss. Again, when I look at it, I will decide. It sounds like we're having a pointless conversation here, sir. I think I'm fairly comfortable with my ability to invest for my son, since I do this for clients like literally every day, right? So for my coaching clients, for my consultations, I'm fairly confident in how I've been working with those clients. My son, the only way he would be different is that he can't give me input, but certainly I think I've done a good job for our family in terms of our investments over the last 8 or 9 years. And I think I'm okay with that, right? Certainly don't mind hearing your thoughts and feedback, of course, but I think we're good. All right. since there are no other questions, let me just check the community group to see if anybody's posting anything, and check on Telegram as well. Now, I did get a note from Mr. Melville for our interview, so I'm going to wait to see if we're still able to do it tomorrow. So that will be confirmed in the morning. So I do see some questions here that seems to be directed directly to Mr. Melville. So I can't answer these. I'll wait for the chance to interview him to ask him those. Let me check the community to see. Okay, I don't see any other questions there. Okay, all right. So Christopher saying, are we going to go over this in the next meeting? Yes. So Chris, we're going to do it as our mid-month stock review, right? So we'll do just like we did the breakdown for Indies last month. We're going to do a breakdown for this one, full thesis and everything. So we'll do that. And yeah, get you, and thanks, right? So thanks everyone. I wanted to do this, of course, to ensure that we get it out of the way. As you probably noticed, videos have kind of been on an interesting schedule. I think everybody understands already. We just had our second child in terms of another son, and so he's 8 weeks old. And so we're trying to balance everything, and that means I can't predict when I'll be able to do the content. So I worked from home today. I had some time. I was able to read the prospectus throughout the day. So that's why I'm doing this video now. I don't know when we'll do another video. I did make the time to interview Mr. Melville for tomorrow, but if just in case that doesn't work out, we'll try to do it at our earliest convenience. And what I do recommend absolutely for everybody is go through, make an informed decision, think about what you're investing for. You are investing for the future, but the future is not the future of the company, the future of the market. Looking at your opportunities, seeing how everything fits. And, you know, as usual, our job is to provide you with the information for you to make an informed investment decision. I believe we've done that with the salient points in this video. I do encourage you to watch other videos about Tropical on this platform. I think Alexander did an interview with Kalila in December as well, where he spoke about their future plans. And so I think between our platform and taking stock, you have maybe 6 to 7 interviews to go through if you want to get a feel for this company. And then, of course, the last 12 months or so, you'd have seen growth in terms of how the business has gone. Yeah, the rest of it is just, it's a personal decision, right? With market offers, typically you may have opportunities on the market as well. So I'd say look out for those. And there are sometimes opportunities that are presented that may come in unexpected forms, right? So look out for those. And I am waiting for a few reports, I'll say that much, for this week, to see how those companies are doing. It's mainly junior market companies. We did see the Trans-Jamaica report already, business as usual there, and some other ones I'm looking for, because I do need to restructure. Well, I don't need to restructure right now, but I just added a few new positions to my portfolio. So I'm waiting for some of those reports and see what that looks like. And for everything else, we'll see. Yeah, man, Tavares, you know, absolutely. I do. And I'll just say this: we don't have any issues, of course, but in general, always welcome feedback, always welcome different, you know, perspectives. It's okay if somebody's sharing a perspective that doesn't agree with mine. I think that's fine. I think we can learn from each other. And what I don't care for, and again, this is not what you're doing, but I had a conversation over the weekend that just, you know, reminds me to say this. I'm not a fan of people who engage in pointless conversation. That's not what we're having here, so we're fine. That would be my only issue at any point, right? So if we're not having a meaningful conversation, that's the only time I'm not interested. Otherwise, feel free to share freely. Timeline is key here. Absolutely, Dalton. So I do have a few questions for them. So the benefit we have here, and I feel like I'm repeating this, but the benefit we have here is that we already see the impact of what they'll be using the funds for. The funds will be used essentially to clear debt, but as opposed to like an Atlantic, we're seeing the fruit of the acquisition for them. And what they're able to do now is bring down that finance cost. The issue is going to be, can they raise the capital, right? So that's what I'm interested to see. Now, to me, it's not a lot of money just under 2 billion, but it depends, right? We don't know where the market is at right now in terms of being able to raise that capital. Their minimum is $1 billion though, which is about half. So I think they should be able to raise that if they've done their preparation correctly. The broker is supposed to help with that. Their strategy for raising funds should help with that. So if they're able to chip down that debt, then that goes to the bottom line, and that should be good for the company. I think when I calculated the dividend yield at the time, I think the price was like 250, 260. That dividend yield wasn't the most attractive at the time. But of course, with a lower price, dividend yield would get better. So that's one of the things that I'll likely calculate as well. So timeline is going to be big. Timeline is going to be big, right? So we'll see. Ryan says, I would personally sell those shares. Better to find another avenue to give my child value rather than sit in a company that looks very well, but the share price may become stagnated. Well, so, okay. I mean, fair point there, but I don't necessarily, again, the share price becoming stagnated, that is something that, again, the future will tell us that. So we'll see. Again, the outlook for him is different than for me. Lower price, yeah, dividend yield goes up, yeah, man, for sure. Maybe timeline can. So Ryan, solely in his, again, we're talking about a 4-year-old. We're not. I know that. I think what you're alluding to here is a thought process that I see some persons have, where once it's an APO, the price is gonna stagnate, the price doesn't move, so on and so forth. Everything in context, I believe. That does not, I'm certain, go for every single APO. And in this case, again, if I'm thinking that the company is going to continue to grow, because that's what I'm looking for. The growth is what will say that, and the future is what will determine that. So, yeah. So, again, not wanting to repeat that there, but I'm thinking he's okay, and I'm sure Renee would agree as well. Oh yeah, man, that's well documented, and I think that's okay, right? I think, and I was really trying to avoid this, right? I think you probably noticed it, right? So Jamaica has a negative stance on APO. Now, I really don't care for the conversation in general. I think it's very, very convenient how the conversation has gone. I think my son is awake. I'll probably have to wrap up this stream. My son is here. So I'll talk about this another day. But again, the timeline here we're talking about is 15, maybe 20 years. I'm hoping that, I'm expecting that in 10 years the share price will move. I don't know. I don't know even if the price is not as even if there is no movement in the short term or the medium term, even, again, we're talking about something that a 10, 15-year outlook at in. Yeah. So you know what? I'm gonna leave it here. You guys are just carrying me in for a loop here. So I have to watch a Warriors game. Thanks everybody for watching the video. Thanks for all your comments. All the best to the company for the offer, and I'll see you guys soon.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.